What is Bitcoin? Well, Bitcoin's the best strategy. The best strategy for what? The best strategy to create shareholder value, the best strategy to grow your company, the best strategy to make money for your investors, the best strategy to keep your company in business forever.
What if everything you believed about corporate success, margins, market share, even going public, was fundamentally broken? Michael Saylor, chairman of strategy and a leading voice in Bitcoin, takes that uncomfortable idea head-on in his Bitcoin for Corporations presentation, and it's a wake-up call for every CEO, CFO, and board member still stuck in the 20th century playbook. Saylor doesn't sugarcoat it. The corporate landscape today is brutal. If you're not one of the Magnificent Seven, think Apple, Amazon, Google, you're probably underperforming treasury bills. That's not opinion, that's data. In fact, Saylor points out that just 400 companies dominate the global equity markets, while the remaining 400 million businesses are suffocating under inflation, debt, and stagnation. According to him, most companies are financially zombified, low liquidity, no real access to capital, and playing it safe, in a world where safety equals decay. Public markets aren't a golden ticket anymore. They're an exclusive club, and if you're not in, you're out. But here's the analyst angle that caught my attention. Saylor isn't pitching Bitcoin as a hedge. He's presenting it as a corporate strategy. Volatility, he argues, isn't the enemy. Stagnation is. Companies like Amazon and Tesla didn't grow by playing it safe. They embraced asymmetric bets. Bitcoin, with its provable scarcity and global liquidity, is that asymmetric bet for the next wave of corporate capital allocators. For any business leader willing to challenge the status quo, Saylor's message is simple. Recapitalize with Bitcoin, or risk being left behind in a system designed to keep the elite at the top. If this perspective resonates with you, subscribe, drop your thoughts in the comments, and share this with someone sitting on a treasury full of idle cash. The next chapter of corporate finance won't be written with fiat. It'll be coded into the Bitcoin ledger. Enjoy the video.
Bitcoin is the solution to the problem. And why? Well, because very few people agree. Because most people don't think it's the solution to the problem. Few agree that you should use Bitcoin to capitalize your business. Now, you don't have to take my word for it. You can literally go out on the street. You can ask 100 wealthy, well-educated people. Go ask any, business school professor. The majority will say, it sounds risky, not a good idea, increases the risk. You go ask the same people, should I use AI in my startup? They're like, absolutely. Okay. The consensus technology is digital intelligence. The paradigm shifting technology is digital capital. Digital capital will save your company because everybody else doesn't understand it, because the mainstream has not yet embraced it. You get to be first. Or in the words of Peter Thiel, and this is probably the most important quote I'm going to put on the screen today, courage is in much shorter supply than genius. I can show you geniuses. There's 8 billion people on the planet. You can find 8,000 people that are the smartest one in a million. You can't find 8,000 courageous businesses to do what I've described. You might think that you've got an IQ 200. You know what people with IQ 200 do in this world? They come up with 100 reasons to not buy Bitcoin. They come up with, they can write books, everything that can go wrong. Well, I can hypothetically imagine that this might be a problem 10 years down the road in that circumstance, and so that's why I will not do it. People lacking courage apply their brilliance to apologize for why they're not going to take the risk. And so this is not about being smart. This is actually about having some courage. Success comes from a willingness to acknowledge reality. I was just showing you some reality, right? Is your business going to all of a sudden start growing 20% a year forever and grow past the Magnificent Seven? Well, again, if you haven't acknowledged that reality, then you won't embrace a new idea, right? You're not winning in the status quo. You need a paradigm shift. Embrace the new idea. Then you have to do the work. Doing the work requires a lot of study, a lot of research, a lot of careful planning. And at some point after all that work, take a risk. And if you do take a risk, then you have to execute. But your path out of this is acknowledge reality, embrace the idea, do the work, take a risk, execute. And what's it mean to do the work? Well, you're doing work for 40 years of your life. You're working. That's, 80,000 hours of work to make money. The great irony is every single person in the economy spends 80,000 hours working, trying to get someone to spend 100 hours to figure out how to keep their money. That's actually challenging. But what I say is spend 100 hours learning how to keep the money that you generated over 80,000. Now, if you're the CEO of a company with 10,000 employees, I want you to imagine 10,000 times 80,000 hours working very hard and then losing all the money. Well, practically speaking, that's what's going on in the world today. It's going on thousands of times everywhere in the economy. Spend 100 hours learning to debunk the 100 criticisms people come up with. Well, I'm worried about this. I'm worried about that. What if Satoshi is a CIA dude? What if Dr. Evil gets a quantum computer? What if? Oftentimes when people get past the it's tulip bulbs, they go to the argument, well, it's too good to be true, so the government's going to take it away from you. That's literally the giga brain objection. You're right. It will solve all my problems, but it's going to solve them so well, it's too good to be true. So somebody more powerful than me that hates me will just take it away from me. So I think I'll just not try. After a bit of work, you conclude that money decomposes into capital and currency. The conventional thinker will tell you money is a medium of exchange, a unit account, a store of value, and they'll stop and they'll act like they just solved the problem. It's like, this is why you don't want to teach people to brainlessly repeat stuff that they learned in school. Well, the truth of the matter is, when you think about it, you realize that high-frequency money versus low-frequency money varies. So if I want to spend the money for the next 4 weeks, I'm going to use the peso in Argentina. It's a super, super high-frequency money. If I want to hold the money for 4 weeks to 4 years, I'll use the dollar. It's the world's reserve currency. Those are mediums of exchange in the world. But if I want to hold the money for a decade to 40 years, I'm going to use an asset like real estate, like gold, like equity. And if I want to hold the money for 10 years to 100 years, I better have a very durable asset, one that's going to last 100 years. So when you put money on that spectrum, you can see that on one side is capital. It's long-term store of value money that I'm going to give to my children's children. And on the other side is currency. It's high-frequency, convenient medium of exchange money. And once you get that, you realize there's a hierarchy of capital assets. I can use a weak currency to store my company's money. I can use a stronger sovereign debt. I can use strong currency. I can use investment grade debt. I can have a 60-40 portfolio. I can invest in the S&P index. I can buy a bunch of commercial real estate. And at top of that hierarchy, just about everyone that studies this concludes Bitcoin is better gold than gold. Bitcoin is better property than physical property. Bitcoin is a better tech equity investment than any company equity. Bitcoin is the apex capital asset. That's the Russell 2000. If you're a Russell 2000 company and you generate cash flow and you buy your own stock back, you're generating a 5% return statistically. You would be better off to buy the S&P index than buy your own stock back, right? If you're an S&P company and you buy the S&P index, or if you buy your own stock back, on average, you're generating a 10% return. The companies like the Mag 7, when they buy their own stock back, they're actually outperforming the S&P because they outperform the S&P, so they're capturing a 31% return. But nobody's capturing the 79% return of BTC. So if you're that Russell 2000 company, instead of buying your stock back, buy Bitcoin. Instead of 5%, you get 79%. Right? And instead of dividending out your cash flows, you bought Bitcoin You know what you're doing when you do that? You're buying a company at 1 times revenue that's growing 79% a year. If I gave you the chance to buy a digital monopoly, a global digital monopoly growing 80% a year for 1 times revenue with the cash, would you do it? The answer is everybody would do it. Everybody would do it. There's not a single company on earth that wouldn't buy a high growth monopoly growing 20, 30, 40, 50, 60, 70, 80% at 1 times revenue. Well, it's right there, right? That's the asset. You might think I cherry picked the numbers. Well, this is the 10-year performance slices for every 10-year period, from 08 to 18, all the way to 2014 to 2025. And you can see Bitcoin is just continually outperforming. The worst 10-year stretch it ever had was 50%. Well, what if you just hire the smartest money manager in the world to actually manage your money for you? Can you outperform it with people with PhDs? Or look at the performance of all the endowments of the Ivy League. All of the money managers running the endowments of Harvard and Yale and Stanford and MIT, they're actually underperforming the S&P by 3%. That is to say, if they all stopped doing anything and you just put your money in the S&P, they would improve performance by 50%, right? All of the gigabrains doing smart performance, for the most part, they just can't beat the simple index. They're destroying value. And what you see is Bitcoin against all these strategies just keeps beating it over long periods of time. There's nothing you can find here that's compelling. You've got one thing that's giving you 56% a year for the past 5 years or so. If you look to the far right, what's the worst strategy? The worst strategy is buy long-dated sovereign debt, like long-dated. By the way, this is not quite the worst. The worst strategy is buy a weak currency or a collapsing currency or international bonds and a collapsing currency. You're going to lose all your money in 3 to 5 years. That's the worst strategy. The worst strategy in the U.S. is buy long-dated treasuries. Who did that? Silicon Valley Bank did that. It bankrupted them. Most banks did that. They would all be insolvent if they weren't given a waiver by the Fed. There's an irony, of course, that the government actually mandates that banks use those treasuries as their capital asset. It turns out that regulations in the capital markets keep a company from capitalizing on securities. That's why Google can't buy the S&P index. That's why companies can't buy portfolios of stock. That's what they knocked out of the system in 1933 with the SEC Act. If you read Rothbard's Conceived in Liberty, there was a lot of maneuvering politically in D.C. between the Rockefeller interest and the J.P. Morgan interest. And this was a big win for the Rockefeller interest against the J.P. Morgan interest. And we had Roosevelt, who was more of a central planner socialist, and it was his way to put the bankers in New York and the capitalists in their place and centralize control of the capital markets. And one simple way to do it is just make it illegal for a company, a public company, to buy stock in another public company. Well, you look at the chart here, and what you can see is that most companies would have been better off to have just bought gold and capitalized on gold. Gold's the 19th century store of value asset. But, of course, they didn't. They can't capitalize on the S&P 500 or the Magnificent Seven. So what you have is one strategy gets zero yield with short-dated treasuries. The other strategy, you get 55% or 56% with Bitcoin. And I guess if you're a gold bug, you buy gold, but there's no consensus there to do that, and that's never happened. Now, Bitcoin happens to be the best performing uncorrelated asset. You can see the numbers, right? It's not correlated to risk asset. It's got the highest Sharpe ratio. And all of the things I've laid out have created a trend. And the trend is more and more public companies are beginning to buy Bitcoin and put it on their balance sheet. When we bought it in 2020, we were the first company to buy any material amount. Now you've got 70 publicly listed companies. You've got $68.5 billion of Bitcoin. You've got more companies coming every week, every month, everywhere in the world.
That's it for today's update. If this video sparked a new perspective, you're exactly where you need to be. Now tell us, do you think Bitcoin can truly transform a company's financial future like it did for Strategy? Or was that a one-off? Your thoughts in the comments. We're building a smart, engaged crypto community, and your voice matters. If you found this helpful, like and share it with someone who needs to hear what's really happening in crypto. Don't forget to subscribe for expert insights and daily updates on Bitcoin, Ethereum, altcoins, and beyond. Thanks for watching, and I would see you in the next one.